Hello everybody and welcome to this video where we will be running over the top 5 solar companies. We have today selected the following 5 stock. First Solar, SunPower Corporation, Sunrun, SolarEdge and Sunnova. First, we obviously want to understand how these companies have been performing for the most recent periods and whether they're in what we consider an uptrend or a downtrend. And we can say in general for solar stocks, they are really on fire. If we have a look at the stock performance year to date, First Solar, modest 43.83%, SunPower Corporation 245.60%, Sunrun 420.35%, SolarEdge with 220.09%, and Sunnova with 161.02%. So extreme growth, which has to do with the whole focus on CO2 emissions, energy transition from the fuel to renewables that has really fueled up some of these companies. So there are some people that has been doing really well holding these kind of stocks, but we obviously want to look at who is going to be interesting, if any, going forward. So first we want to take a look at the income part, and we basically want to understand if some of these companies are earning money or not. And as we can see from the net income, First Solar is earning money, SunPower a small profit, Sunrun big minus, SolarEdge very decent profits, and a quite big loss for Sunnova. For these companies specifically, some of them are obviously considered growth stocks, and we can therefore accept a net income that is negative if the growth rates justify this. Next, we want to take a look at the net profit margin average for the last 4 quarters, and what we can see is First Solar has a respectable 6.05, SunPower really poor here with 0.73, Sunrun minus 0.55, decent one for SolarEdge on 10.9, and a really poor for Sunnova with 113.01 in minus. So a little bit mixed apples and pears here across the board. The colors are red, they're benchmarked against the industry, and most of these falls under the semiconductor area. So that's maybe not a 100% fair comparison for the solar companies which are in growth, a lot of them. However, this is the industry that they belong to as of today. We can also take a look at the BNEM score, which is a mathematical model that determines whether a company has manipulated its profit. We want that to be below minus 2.22, and we can see all of them are living up to this with the exception of Sunnova, which only has minus 1.88, so a small red flag. We can also take a look at the Sloan ratio, which identify if a substantial part of their earnings are non-cash accruals. We are not interested in that, and we want this to be between minus 10% to 10%, and again looking fine across the board with the exception of Sunnova here. So there are already some red flags with them according to the metrics we have looked at so far. So running over the overall ranking, we first looked at the trend for these stocks, and we can see that all of them are in an uptrend as of today. On the net income part, it is positive for First Solar, SunPower, SolarEdge, but negative for Sunrun and Nova. On the net profit margin for the average for the last 4 quarters, we saw the SolarEdge has the highest, followed by First Solar, SunPower, Sunrun, and Sunnova, who had a really poor net profit margin. Next, we want to dive into the return metrics, and we want to understand how high returns and cash flow margin is being generated by these companies. So if we first take a look at the return on invested capital here, we can see that First Solar has a positive on 3.19%, SunPower a minus on 8.64, really poor number here, minus 4.91 as well on Sunrun. SolarEdge doing again the best with 10.98, and a small minus on 0.65% for Sunnova. On the levered free cash flow margin, all these companies, with the exception of SolarEdge, has a negative cash flow margin, which again red flags. And again we see here Sunnova with minus 516. It's not really looking good here. I'm going to be very interested to look at the growth potential for this company to see whether that justifies the increase in the share price. Next, we can take a look at the balance sheet ratios and how strong is the financial position. And again, this is very interesting because we obviously want to understand if we're looking at growth companies, do they have the necessary balance sheet to support this? So we first look at the current ratio. We want that to be above 1. All of these are living up to that, especially SolarEdge and First Solar looks pretty strong. On the cash ratio, we again want that to be above 1. We can see that it's only First Solar and SolarEdge who lives up to that, while as SunPower Corporation, Sunrun and Sunnova are looking pretty poor. You can also take a look at the total assets versus total liabilities. In general, we want this to be above 1.5. Again, First Solar and SolarEdge are the ones living up to that, while as the other ones are a little bit poor. And we have again a similar story on the debt equity, where we get a pretty big red flag here on 12.46 for SunPower corporations. In general, I would stay away from companies with such a high debt equity ratio. I would though say that SunPower Corporation is owned by an oil and gas major, Total, which has a strong balance sheet, so I'm sure they will support the company if required. You can also take a look at the Altman Z score, want that to be above 1.8, and it's basically a credit strength test that assesses the likelihood of bankruptcy. First Solar and SolarEdge looking really well, while as the Nova, Sunrun and SunPower Corporation is looking really poor. We also have the Piotrowski score, which is another way to assess the strength. We want that to be equal above 5, and we can see that First Solar, SunPower and SolarEdge are living up to that, while as Sunrun and Sunnova are scoring really poorly on these numbers. So there's a lot of red flags with SunPower Corporation, Sunrun and Sunnova on the balance sheet. So if we go back to the overall ranking and we are looking at the return on invested capital, the levered free cash flow margin, we see a general trend of SolarEdge being the best, followed by First Solar. On the balance sheet part, the title ratio and debt equity, a similar story is coming here. First Solar and SolarEdge are doing the best overall. So again, a clear signal on these companies on the numbers side are doing really well, whereas all the others are struggling a bit. On SunPower specifically, this may be one of the reasons why the company did a split on the product service offerings by splitting out the manufacturing arm of the solar business. So that is basically going to be handled by a separate entity going forward called Maxion. And I guess the company did this because they believe that it's better if the individual companies can focus on their core areas and thereby their core competencies. On the balance sheet specifically, of course, some red flags on SunPower. However, they are owned by an oil and gas major, so I'm not particularly concerned about them. It is more whether they will be able to do what we can consider a turnaround by splitting up their business. We then move into the shareholder yield, and we want to understand how much value is returned to shareholders through dividend and or buyback. And for these companies, it's not really interesting because none of them are paying any dividend yield. And on the buyback part, it's the same. They will most likely only issue more shares to fund their growth going forward. So again, you should definitely not buy the stocks because of a yield that they're returning. You should more buy them from a growth perspective. So no reason to focus more on that. More interesting is the earnings per share and growth going forward. We want to understand whether the companies are growing at the moment and whether they're expecting to grow in the future. So first we can take a look at the PE ratio of the companies. First Solar and SolarEdge around 80-90, so that's pretty good compared to the industry. SunPower Corporation has a PE of 540, extremely high, and Sunrun and Sunnova both had a negative PE ratio. On the earnings per share growth forecast for the next 5 years, again, interestingly enough, we see Sunnova is doing really fine here. So that is a good sign compared to all the numbers that we have seen so far, but it's not necessarily going to be the truth. First Solar and SolarEdge are also having very good growth expectations with 25.99% and 20%, while as SunPower Corporations and Sunrun has a minus, so again a red flag here. We can also look at the net profit growth for the last 12 months. And here it's also interesting to see that all the companies has really increased their net profit. So again, it tells the story on that these companies are on a growth journey, and they're now starting to focus as well on growing their profits, with the exception of Sunnova, which has actually declined over the last 12 months. So again, another red flag for them. So back to the overall ranking, we obviously excluded the yield part, as it doesn't make any sense to look at this for these growth companies, and we are instead focusing on the earnings and growth potential. So first, on the earnings per share growth forecast for the next 5 years, we saw that Sunnova is doing the best, followed by First Solar and SolarEdge. On the revenue growth for the past 5 years, SolarEdge was doing the best, followed by Sunrun and Sunnova. And on the net income growth for the last 12 months, we're looking at a more or less similar situation where SolarEdge are the best, followed by Sunrun and First Solar. So we're getting a clear sign here that at least SolarEdge seems to be a very, very well-run company compared to the competitors. Next, we want to understand whether these companies are currently under or overvalued, and we have different ways of doing that. One way is to look at the PEG ratio, and basically if this is below 1, they're considered undervalued. If they're above 1, they're considered overvalued. So for First Solar and SolarEdge, we can see that both of them are overvalued, while as for SunPower Corporation, they have a negative earnings growth forecast, and Sunrun and Sunnova have a negative PE, so we cannot calculate for them, but they're most likely overvalued. We can also look at my own estimated intrinsic value that are based on several different numbers and assumptions, and based on that, with the safety margin, it appears that all companies are also considered overvalued from my angle. Lastly, we can take a look at the beta ratio, and basically that is just a risk volatility in relation to the overall market. If it's above 1, it's more volatile than the market, and we can see that all companies here are considered more volatile. You can also look at some other indicators. One way is to look at the book value per share, and basically if this is above 1, they're considered undervalued, and if it's below 1, they're considered overvalued. And again, all companies here appears to be overvalued. On the relative strength index for the last 14 days, we want this to be below 30 because it means that it's oversold and therefore may go in an uptrend. Versely, if it's above 70, it's considered overbought and it may therefore pull back. And here it becomes really interesting because First Solar is getting really close to overbought territory. SunPower Corporations is there by far already with 83.56. Sunrun in the middle. SolarEdge also in the overbought territory with 76.40. And Sunnova with 59.96, so in the middle range here. So again, there's a growing tendency that these companies are considered overvalued as of today. Lastly, we can look at the analyst recommendations, and again, I'm not using them as a guidance or decision-making tool, but I think it's always interesting to see if my numbers appears to be aligned with there. So we can look at the consensus price target, which is basically just the middle ground of all the estimates. Some analysts will have higher price targets, some will have lower. And basically what they're saying is there's a downside on 19.46 on First Solar, 38.07 downside on SunPower Corporation, 23.10 downside on Sunrun, massive 48.43% downside on SolarEdge, and actually a bit surprising upside on 12.75% on Sunnova as the only company. So again, huge discrepancy here, but in general, my assumptions are pretty well aligned with the exception on Sunnova for these companies. So back to the overall ranking and the overall value assessment, whether these are considered under or overvalued. I think it is by no surprise that we currently consider all these companies as being overvalued and non-attractive to enter into as of today. Not necessarily in the future, but just as of today. Alright, that leads us to the CMD top picks for today. So based on extreme growth in share price, risky profit margins, overvalued, we have deemed that we do not have any top pick today unless there comes a pullback. If there comes a pullback in SolarEdge, First Solar or Sunnova, we may enter into a position in one of these companies, but the valuations as of today are really too high and it's not justified by the numbers at all, or for that matter the growth potential going forward. So we will therefore not recommend any purchase within this industry as of today. However, if there comes a pullback, look for these companies because there may be good value. I would say Sunnova is a bit more on the riskier side compared to First Solar and SolarEdge, which appears to have better numbers in general, and this is a good indicator that they may also be able to deliver good value in return in the future. That was all we had for today. Please note that we are not professional financial advisors. This is purely for entertainment purposes, and you should therefore do your own due diligence in these companies and investigate a lot before you take an active investment decision. If you enjoyed this video, please like, subscribe for future content, provide any feedback you may have for improvement so we can try to do a better job going forward. Otherwise than that, have a good day and stay safe. Stay tuned for more content going forward. Bye.